today we're going to be talking about mixed-use buildings. So these are buildings with a residential component and also a commercial tenant or office tenant. And Jon's a bit of an expert. He's got 5 buildings.
Commercial on the first floor and then either 1 or 2 stories of apartments above that.
First things I'd love to talk about is risk versus reward with these mixed-use buildings. So
once you buy many multifamily buildings or many apartments, non-payment is just something you have to deal with, and that's not necessarily the case when you set foot into the commercial space and get started. Vendors are professionals, so they've already done well. A lot of them have quite a bit of experience and they understand the terms they're supposed to understand. It's a lot less work, it's a lot less management intensive to do the commercial component. If I were to lose a commercial tenant, there's no way it should sink the investment. The lender would expect that you be in a position where it wouldn't sink the investment.
What is up, YouTube? In today's video, we're sitting down with Jon Kepler and we're talking about mixed-use buildings. Now, normally what these buildings look like is a commercial component on the main floor and residential above. The reason Jon's an expert on this is, well, he's in fact Owen Sounds' second largest landlord, and he's really specialized in a lot of these mixed-use buildings. When I was originally getting into real estate investing, I've heard a lot of mixed opinions about it, but I thought, why not sit down and go direct to the source with Jon Kepler and find out what's the deal with mixed-use commercial buildings. Seems like he's doing all right with it, so why do other people think it's not a good idea? Let's find out in today's episode. What is up, YouTube? Matt McKeever here. We're back with Jon Kepler and special guest Wellington. And so today we're going to be talking about mixed-use buildings. So these are buildings with a residential component and also a commercial tenant or office tenant. And Jon's a bit of an expert. He's got 5 buildings and he's really been building up a portfolio in a small town in Ontario, Canada, Owen Sound. And one thing I noticed, I grew up in some small towns as well, that there's a lot of buildings that meet kind of this profile in like the old downtown cores. And I was always drawn to these type of buildings because they often looked like they were priced at a really interesting or attractive price range compared to, say, like a great big apartment building. I guess to me it always felt like an easier, more attainable way to get into an apartment building than, say, buying a 30-unit building.
Exactly. We found it to be more attainable. We've noticed that some of the smaller mixed-use buildings are maybe a little complex for a beginning investor to take on. There are a few things we'll go into in terms of how they can be more complex and more difficult to finance and manage, but then it's just a skill set that you need to adopt. And there's an opportunity because a lot of investors who are buying in this price point are willing to take this on. They're trying to buy multifamily only without the commercial component. And so there's an opportunity there to get a better cap rate and get a better deal.
Yeah, so one of the first things I'd love to talk about is risk versus reward with these mixed-use buildings. So a lot of investors I talk to at networking events at least have the bias or the opinion that a mixed-use building is riskier because now you have commercial tenants.
Well, yeah, it is riskier. Straight up, your lender is going to want to do 65% loan to value instead of 75% loan to value. So you lose that 10 right off the top unless you have some private financing or creative financing in play. Also, you have the risk that your storefront or your office will go vacant and then you'll have to float that until you find another tenancy. At the same time, presuming that all the commercial tenants pass your due diligence and you believe they're reasonably solvent when you get in the building in the first place, as long as no one's distressed to start, they have a high probability of working. So once you buy many multifamily buildings or many apartments, non-payment is just something you have to deal with. And that's not necessarily the case when you set foot into the commercial space and get started. We've actually had an amazing payment record with our commercial tenants. Almost everyone pays almost all the time. If you have little issues, everyone's sophisticated and professional. You're not threatening each other. You're just working it out. And so vacancy is your risk. You do have to manage that. But other than that, it's a lot less work. It's a lot less management intensive to do the commercial component.
And so how concerned do you get about, say, like commercial vacancy rates? Like, I guess to me, when I'm looking at residential vacancy rates, it feels appropriate to apply like a broad, like paint with a broad brush, I guess, is my thought process. So like if I'm looking at a neighborhood and it has like a, whatever, 5% vacancy rate for residential, I'm like, yeah, probably that's the thing for the entire neighborhood. Where I guess from an outsider looking in with commercial or mixed use buildings, it feels like it's much more like, it could be street specific, it could be block specific, as far as like, sure, maybe it's like a 20% vacancy or a 10% vacancy for this entire town with commercial space. But do you know what I'm kind of getting at here?
I do. Well, it's much more building specific, and you know, in the multifamily space, you get some apartments that are renovated to a very high standard and others that are not, and so you get that variation. But everyone's paying their rent and the whole neighborhood's kind of working. Yeah, it's definitely more, we'll say, separated in the multifamily space, or excuse me, in the commercial space, in the office and storefront space, because you'll get a great storefront, maybe it's well renovated or it has strong cash flow, and then you'll get another one that just doesn't look good and has no cash flow and they can't lease it. So at the same time, that can be a good thing, right? When you're looking at small apartment buildings, maybe you're concerned you can't get the cap you want, you're concerned you can't get a deal, or the margins aren't there for a fix and flip or a turnaround. And in commercial, it's understood, if you use the word distress carefully, because again, it doesn't mean that the owner is in trouble, but if there is a building that isn't leased, hasn't been leased in a while, doesn't look good, and doesn't have momentum, that is a certain form of distress, and there is more of an opportunity for you to go in there and fix it. And the margins are extremely high if you're able to go in and fix it. So it's an issue of increased risk, increased reward, but it's risk that you can manage as you go and as you know, have more experience and learn to know what you're doing.
Yeah, and so when you're looking at, say, acquiring a mixed-use building, how much of a consideration is it for you if, say, that commercial space has been vacant for years? Like, is that like a giant red flag, or could that be mismanagement? Like, what's your opinion there?
I would just need to be very confident in terms of why it has been vacant. So I wouldn't necessarily believe the narrative that I was first given, but there are good reasons. As long as I was sure that I was correct, yeah, I would be able to get over my hesitation and jump in anyway, as long as the numbers were where I wanted them to be. So we've bought buildings that haven't had a commercial tenancy in decades. That's okay with us. We know what to do. We know how to fix it. And then we've had other ones where they haven't had problems. We're really hoping that they continue to not have problems. And another thing to consider as well is the flexibility of the space. So the first deal we got very much needed to go well. We didn't have a whole bunch of room for mistakes the way we might have later on in our business. And so what gave me comfort with that space was that if that retail operation didn't work out, it could very easily be converted into an office setup. A few years before we bought that building, it was used by two different businesses that were sharing it as an office. So these two businesses didn't do the same thing. One was in real estate sales, one was in technology, and they still did kind of a co-working setup. So I was confident that that space was flexible enough that we just had a range of options, and that one of the options would work no matter how much trouble the tenants had, or no matter, you know, what sort of vacancy we were dealing with at one moment in time.
Gotcha. So you brought up something that really sparked a question for me. So taking over a building or buying a building that, say, had the commercial space vacant for a decade, why would it be vacant for a decade, and how were you able to go in and fix that situation to bring the property up to its highest, best use?
So the worst one, I think that the worst one is probably the one I was referring to there. It was not just an estate sale. The estate had actually passed on the building to another family member, to the next generation, and that person didn't wish to be a landlord. So the building just, it wasn't positioned well, the cash flow wasn't where it was supposed to be, issues weren't being attended to. And interestingly, with that building, we didn't go in and do massive renovations and completely turn around the commercial component. We did the residential upstairs first.
Oh, okay.
And frankly, with the commercial, since it was such a turnaround, and the community didn't have much of an opinion of it, since you know, citizens weren't familiar with going in it. No one had been there to get their hair cut. I mean, that's for sure, right? So because of that, we actually did slow incremental improvements, and maybe somewhat creative things, such as dividing off part of it and using it for storage. And we definitely left money on the table in terms of what we were charging in cost per square foot. I mean, if you're renting it to someone as storage space, it's obviously not as valuable as if they're selling jewelry out of it or doing something where their sales per square foot get to be very, very high. But we're able to do that quickly, and it allowed us to take a space that didn't look the greatest, maybe wasn't ideal for certain types of businesses, but then just get the cash flow rolling anyway so that we can continue repositioning.
Got you. Have you ever had to like lock a tenant out? Have you ever had to evict a commercial tenant?
We haven't been all the way through that process, no.
Okay.
So it's different than residential. My understanding is that the court system is involved. At one point, I wondered if I would have to become an expert in that regard. One thing that I think we might have discussed in other videos is how in the multifamily sector, I became an eviction expert because it was basically, the world told me this is what you're going to do to keep your business running just right, and so I got to really know all the ins and outs. So in this case, I haven't been put in a position where I've had to learn all the ins and outs, being upfront in terms of the limitations of my knowledge, but I guess, I'm happy to not know more because I've been fortunate to not need to. At this point in our business, just based on the number of buildings we have and the amount of activity we're doing, we can afford to use more experts in that process if we needed to. So at this point, we have a legal team that is always working on some other things anyway, so we would just use them for the commercial situation as well, if there was one.
What's the difference in leases? Are you still writing the leases for a commercial use building, or is that something your lawyer does? What does that look like?
So we have leases that we like. They're originally from lawyers, though we kind of adapt them over time. One strategy that I think might be underutilized is, yes, you can go to a lawyer and get a lease. There are definitely boilerplate leases, but the boilerplate leases, first of all, could be very dated, and beyond that, they don't necessarily reflect how things have been working in the market. If you get a lease from a lawyer, even if you have it on good authority that it's a good lease, you have no indication of whether or not it's a lease that landlords in general particularly like, or a lease that tenants in general particularly hate. Again, what is good to some is often overly legalistic or overly binding to another. So what we've done is, as we buy buildings that have existing tenancies, we pore over the leases and we grab clauses, and we keep a bit of a ledger on this and what clauses we like and what clauses we think are weak and need improvements. And so, yes, we use boilerplate leases from lawyers, but we also look at the existing leases we take over and just kind of put it all together so that our business runs as smoothly as possible. So we have the clauses in there that are valuable to us, and the tenants have the clauses in there that they talk to us about that actually work for them.
Gotcha. And so the mixed use buildings we're talking about, I'm assuming it's often a commercial component on the main floor and residential above?
Exactly, yes. So commercial on the first floor and then either 1 or 2 stories of apartments above that.
Okay. And so one thing I've heard commonly, I've heard it so often, in fact, that like I've just internalized this as a rule that I look at when looking at mixed use buildings is, if you're looking at buying one of those buildings that's maybe commercial on the main floor, residential on a couple stories above it, is you want to buy a building that works with just the residential. What's your thoughts, your opinions? Have you heard that before?
Oh, I completely agree. Yes.
Yeah.
Yes. If that wasn't the case for us, I might have been too nervous to get started.
Okay. So in essence, like for your business model when going into these mixed use buildings, is the building would like be break even with the residential, or what does that look like? Like what's an enticing model? And then is the commercial just like the profit, the gravy for you?
This is going to be somewhat fluid, of course, and you have to find a deal that works for you, and also you have to buy a good deal, a workable or livable deal, and then improve it over time as well, right? But yeah, on day one, we don't want to go cash flow negative just because we have minor commercial problems. If I were to lose a commercial tenant, there's no way it should sink the investment. The lender would expect that you be in a position where it wouldn't sink the investment. So people say like, oh, it's gravy. I've heard that before. Yeah. Or a few years ago, you were able to find deals where you could almost meet your cap rate objectives and investment goals without the commercial tenant, and therefore the commercial tenant just gives you just a crazy cash flowing building. We've experienced some of that as well. At the end of the day, I just try to set it up so that I'm satisfied with all outcomes. And as our business grows and matures, we're just willing to take bigger bets on commercial. The first deal, I was taking a bet on commercial, hoping for the best and trying to protect against the downside 100%. And now I've accepted that commercial has momentum, it's done well for us. And frankly, if we had one building where we had massive problems, the other commercial spaces at other buildings would cover it off.
Gotcha. So what's the difference when looking for a commercial tenant? For example, if I'm looking for a residential tenant, I'm just going to post on Kijiji, Facebook Marketplace. I can pretty much call it a day. What do you do in order to find these commercial tenants to move into your buildings?
Well, one option is to talk to a realtor, either a commercial realtor or someone who has some commercial experience. My spouse, Alicia, is a realtor, so she would be able to put her sign in and do leases for us. At the same time, if you have business connections and if you know your community, word spreads. Even other landlords in our town, they're aware of what spaces are out there, and it's sort of a case of just connecting people or putting all the right puzzle pieces in all the right spaces. So the same way I talk to other landlords around about certain certain residential vacancies and who's looking, and I have a difficult 3-bedroom over here, do you have someone for me? You can do the same thing with commercial.
Gotcha. And so another, at least impression I have when it comes to commercial buildings, commercial units, is that often there's a lot more flexibility in negotiating the terms and kind of the length of tenancy, and even often you pay this amount this year, but maybe next year it starts to ramp up. Mm-hmm. How do you decide when to compromise on the price you wanted to get just to fill the space versus holding out for the right tenant?
That's a fair question. It can be tough. I think that any deal you make is a deal you've got to live with. We try to set ourselves up to be in strong positions regardless. So I think if you had a business where you had cash flow challenges or you were struggling, you might be able to be induced to sign up for a less beneficial lease than you otherwise would be. We work hard to ensure well in the future that we never find ourselves in that position.
Yeah.
So in our business, we just say no relatively easily. That's what it comes down to. So we don't get into bad terms because we don't agree to bad terms. Perhaps I'd be more helpful in terms of how to, if things were different, I could discuss how to agree to less than ideal terms that still kind of half work for you, or the idea of maybe starting a lease that doesn't work but then fixing it later. I'm just not into that, frankly. I do know that some people, as a tenant inducement, will do a whole lot up front, or very cheap rent up front, and then sometimes in year 2 or year 3 it'll start to ramp up. My concern with those is that you attract tenants who can't truly afford the space. So maybe an unexpected comparison, but a relevant comparison would be the real estate crash in 2008 in the United States, right, with the teaser rate mortgages. So in the same way, yeah, we're willing to do things for tenants. We can talk about renovations, we can talk about setting them up for success so that their customers are happy, whatever that means. But a teaser rate to get them into a lease they can't afford isn't good for us. That just means that year 5 is fake and it isn't really coming. So I'd much rather just put together something that everyone can live with that's reasonable from the start, instead of going overboard with inducements that just create the wrong impression and create, frankly, the wrong dynamic in a relationship that's new and vulnerable.
Mm-hmm. Yeah, that makes complete sense. So when you're looking at buying a new mixed-use building, do you, before you close on the property or before you go firm, do you start already looking for tenants, or commercial tenants, or is it something where that's something you're going to figure out once you've closed on the building and have possession?
We look as soon as we can, and we do that in conjunction with the other people in the deal as well. So there's nothing secretive, there's no sleight of hand. One time we moved particularly quickly, we were able to get a building conditional with a longer conditional period, so everyone was willing to work together. And it was understood that we were going to attract a tenant. There were 2 commercial spaces in this building, so we were going to work it differently for each one. So the second tenant, we were able to have the listing agent agree that they would put in best efforts to lease it by closing. And then, because that one was kind of the extra, we didn't have to lease that one. And then for the first one that we really did have to lease, we had a conditional period where we were to attract a tenant, and have them sign a lease and use that as the basis for our appraisal, all before going firm on the deal. So the building has no commercial tenants at all. We argue it's not particularly saleable, so we're going to have to get all that wrapped up or there won't be a sale. And so everybody was willing to work together, and ultimately that deal got done. So I feel like we asked for a lot, and I feel like they were quite flexible, but it was in their best interests, and at the end of the day it worked.
Yeah, I like that. That's very creative. So for our Ontario, Canada viewers, do you mind just touching upon HST and how that kind of comes into play with like commercial tenancies and even buying a commercial building?
Yes. So I don't think it's an important question. I think people have a lot of anxiety around this.
They really do.
Yeah, first of all, you should have an accountant, and you should talk to the accountant, and you should trust the accountant. I'm not just saying that because anytime you give some financial advice, you want to say, oh, talk to your accountant. No, it's because you really should have someone you can trust. If you don't have someone you can trust, you aren't going to have the confidence to make the correct decisions quickly. So I'll give a good answer today, but get comfortable with it, because if you don't get comfortable with it, you're not going to conduct yourself properly in order to get the deals that work for you and are best for you. Get an HST number, whether you do this in a corp or you don't. Get an HST number. You're not actually going to have an enormous HST bill when you buy the building, because it's understood that you're going to be charging your commercial tenants HST. Your commercial tenants are going to be paying HST in many cases because they're going to be selling products where they charge the customer HST. At the end of the day, the CRA wants to make sure that they get their tax revenue, and it's your job to explain that you are not the source of their tax revenue. So I don't want to pay HST. Here's a logical, above board legal reason why. And that's it. So get an HST number. You don't have to pay an enormous HST bill when you buy a building with a commercial component. You will be charging your tenant HST. Whether or not your tenant gets their HST back is subject to how they operate and the realities of their business. But if they are selling products and charging their customers HST, there is an opportunity for them to verify with their own accountant that they can get the HST back that they pay you. So when you're charging HST to a tenant, it isn't even in all situations a cost that they're incurring at the end of their tax year.
So in general, usually for the building owner, for the landlord, when it comes to commercial units, HST is really just a flow-through credit, right? It's
a flow-through. It's something to deal with. It is not something that makes or breaks your investment. And if you have, I mean, you have to deal with it. It's really, there's no other issue besides that. If you're trying to attract a tenant and they say, can you do this without HST, and then you say yes, and then you get yourself a tax liability in the process, that's just unwise. That's just bad business. So at the end of the day, get comfortable with it. Understand that you will be charging it. If a commercial tenant wants to make some sort of special arrangement with you, say no. At the end of the day, learn the rules, follow the rules, and we don't really hear any complaints about it.
Yeah, and again, I know a lot of people do have anxiety the moment CRA, HST come up. Literally a 15-minute, 30-minute phone call or in-person meeting with an accountant will solve 99.9% of any of that anxiety or questions that you guys have. So I really encourage you, just reach out to a tax accountant. They'll be able to walk you through the process, and you can put that concern to rest.
Maybe one other thing to add, if the issue is the nervousness about dealing with it and handling it, understand how you have to operate, and then get comfortable that that's how you will be operating, and then operate from that position, basically with what I'll call assumption. So when you're talking to a potential commercial tenant, you will be charging HST. You assume they're fine with it. They have to be fine with it. Do they want to operate in Ontario? So you assume that they're going to do it. You tell them this is just the way it is. No negotiation, no hesitation, and that's it.
Yeah, love it. Any other tips or just kind of suggestions in general for people that want to move into the mixed use building space?
Well, I like mixed use, and I like buildings that are generally thought of as more commercial, whether that means larger multifamily or mixed use building or a building that's exclusively office space. And I like those because the vendors are professionals. So they've already done well. A lot of them have quite a bit of experience, and they understand the terms they're supposed to understand. So you're not dealing with people who are brand new or who don't know anything. I also think in terms of small mixed-use buildings, the price points seem affordable for newer investors, maybe investors who are looking at duplexes, triplexes, fourplexes, they might consider looking at certain mixed-use buildings, and then they decide not to take them on because of the mixed-use challenges, such as the lower loan-to-value from your first mortgage lender, the risk of commercial vacancy. So I didn't initially intend to get as far into mixed use as we did, but we kept finding opportunities because there were these buildings that were well under $1 million, not institutional properties in any way, and yet beginning investors weren't able to close on them or weren't willing to take them on. So it really did become a niche for us that we didn't expect, but it's worked out very well.
Awesome, love it. Thanks again, Jon.
Thanks.
Thanks again to Jon for taking the time to sit down with us and break down mixed-use buildings. If you guys want to watch more Jon Kepler, check out this playlist right here, or if you want to see more Matt McKeever content, check out this playlist down there. Again, thanks again to Jon. Make sure you're following him on Instagram. If you're not, we'll throw a link in the video description down below. But until next time, remember, making money is a team sport. There's more than enough money in this world for us to all make it, but if you're not saving it, I mean, like, what's the point? Thanks, guys.